Hey there, I'm Liz Petsky. I am one of the broker owners, along with my husband Lars Petsky, of Remax by the Lake with offices in St. Joseph and Stevensville. I wanted to give you a quick update on the housing market. I know there's been a lot of things in the news as far as the Fed funds rate and inflation and mortgage rates and the housing market crisis and low inventory. So I just wanted to talk about a few things and kind of break it down for you on how that affects you as a seller or buyer in our market. So one big thing was the announcement that the Federal Reserve increased the Fed funds rate by 75 basis points last week. That's the greatest increase since 1994. At the same time, mortgage rates increased by a 0.5% during that time, which is also one of the biggest increases since 1987. So those two things actually don't follow each other. Fed funds rate is basically the rate that banks can loan money to each other. Mortgage rates usually follow the 10-year treasury yield, so the bond market. So those are not necessarily dependent on each other. Now, inflation is high. We all know that, right? Gas prices are high. The CPI index has increased quite a bit. So the Federal Reserve has increased Fed funds rate. That's really the only way they know of decreasing inflation so that it doesn't get completely out of hand is by increasing rates. So because of that, we are now also in a bear market, as far as the market, it's decreased. And that means it's decreased 20% in a short period of time. So we are in a bear market. Um, Fed Reserve rates came up, mortgage rates came up. Just want to talk about what does that mean for you, especially if you are a buyer or seller. So mortgage rates jumped, like I said, a 0.5% last week. A year ago today, we were at 2.96% for a 30-year mortgage, and today we're looking at about a little over 6%. So just if you had a $400,000 mortgage, a year ago, your mortgage payment would be for a 30-year mortgage $1,678 per month. Today, you're looking at about $2,406 a month. So that's a $728 difference per month in your payment on a $400,000 mortgage. Equates to about $8,700 a year. So that's a big difference, right? But you have to also take into context the historical mortgage rates. Hey, I bought my first home in 2006 with 20% down, and my interest rate was 6.5%. That was normal then. We've been in a artificially suppressed rate market. So for those of you that have, watched over the last 14 years, rates being at 2, 3, 4%, that's an artificially low interest rate. Typically 6% where we are now is much more normal. So to give you that perspective a little bit, it feels high. It has decreased some purchasing power for some buyers, but that's some good things and some bad things. So I'll talk to you about that a little bit. So as a buyer, it's a good thing, maybe your purchase price is gone down a little bit in your purchasing power, but the buyer's market is now being shifted too. So it's a little bit less competitive. So if you've really been priced out of the market for the last 6 months, year, 2 years, to where there's just too competitive of a market with these escalation clauses and appraisal gaps and inspection waivers, you have a little bit more of a competitive edge here because there are going to be less buyers in the market. More inventory is going to hit the market. You're going to have more choices out there as a buyer. And essentially, if this works with increasing mortgage rates and the Fed funds rate, if inflation comes down a little bit, mortgage rates will decrease at one point. So you don't have to look at, hey, I'm at 6% forever. If rates come down after a year, you can refinance your mortgage. And if you need tips or help on anybody locally that you'd like to refinance with, get in touch with me and I can help you with that. And also just, it's still a low inventory scenario. So as more things hit the market, will become more of a stabilized market, which is better for buyers and sellers. Now, sellers out there, right? So what does this mean for you? So your home might take a little bit longer to sell. It may not be, 10 offers the first day on the market. But a lot of sellers have held off on selling because they've been afraid to be in a position where they can't find anything to buy, which is a real concern. Some of that will stagnate a little bit. You'll be able to find something to purchase, but it may take a little bit longer for you to sell your home. And also, if you're in a downsizing scenario, you're selling a $400,000 house because your kids are off to college and you need something smaller and moving to something that's a $200,000, you can take advantage of the fact that, the market's a little higher right now and that you can downsize and pay cash for something. So just want to give you an update. Things are shifting a little bit, but that doesn't mean all is lost. We're just going to a more balanced market instead of just a seller's market.